Hello, everybody. This is Bennett Tchaikovsky, and welcome. This is my Wiley solution walkthrough. This is from the textbook Accounting Tools for Business Decision Making. This is the 8th edition, problem 15-1. The textbook authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. The question used in this presentation is copyright 2022 by John Wiley and Sons. All rights are reserved for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So I'm actually showing my face today because one of my coworkers, Ms. Carolina Casoy, said, Bennett, why aren't you using your videos? So I'm going to put this up there. I'm going to send it to her for her to go through and check out. So if she doesn't like it, or if I should kind of remove my mug from the lineup, that's what we'll go ahead and do. So for what we're going to be going through and using, so in terms of where to kind of go through and find this question, is that one of the places, or you can find that one that's kind of close to it. If you come over here and do Kimmel Accounting, it's the author of the textbook, you'll actually come up with a listing of different ones. And this one right over here, this is going to be pretty similar to the one that we're going to be using. It may not be exact, but it's going to be somewhat similar. So let's come over here and take a look at our particular question. Okay, so we've got here lot company uses a job order cost system and applies overhead to production on the basis of direct labor cost. On January 1st, job 50 was the only job in process. The costs incurred prior to January 1st on this job were as follows. As of January 1st, job 49 had been completed at a cost of $90,000 and was part of finished goods inventory, balance, and raw materials. And then we have all this other additional information. Now, one of the things that you'll kind of see is when I'm solving job order costing problems is I like to lay it out like this. And there is a very particular reason why, is because it's a better, in my opinion, this is a much better visual representation in terms of what's going on. So if I can kind of see this over here, kind of, how everything is traveling, that's going to be much easier for me to go through and to deal with. And it will also give us the journal entries if we're asked to go through and prepare them, but I'm not a big fan of journal entries for when it comes to this. So if you want to email me and say, hey, Tchaikovsky, can you do the journal entry? Sure, we'll go ahead and do it. But let's go ahead and tackle this particular problem. So let's go ahead and put the information into the T accounts first. And then what we're going to go through and do is we're going to go through and then kind of figure out how do we go through from there and try to kind of see, well, how do we get everything to go through and balance? So just as kind of a reminder, both factory payroll and factory overhead have to have zero balances at the very end of the period. Raw materials, work in process, and finished goods, inventory, those can all have balances because they're part of the inventory for a manufacturer. Remember that the inventory for a manufacturer includes raw materials, work in process, and then finished goods. So let's go through each one of these little items right up here and we'll try to figure it out. So on January 1st, job 50 was the only job in process. And over here, the costs incurred prior to January 1st on this job were as follows. So my beginning balance over here is going to be $20,000 for direct materials. It is going to be $12,000 for direct labor and $16,000 for manufacturing overhead. Just to kind of make sure that we know where this, again, where is this number coming from? This is the only job that was in process. Right over here, I'm going to say, oh, this was 20 plus 12 plus 16. So that's going to be our beginning balance right over here for this particular job, or job 50. So that was the only one that had a beginning balance. Let's go over here. Okay, as of January 1st, job 49 had been completed at a cost of $90,000 and was part of finished goods. So my beginning finished goods inventory is going to be $90,000. So right over here, my beginning balance for finished goods inventory is going to be $90,000. As a reminder, inventory is an asset, right? So if you're not familiar with T accounts, please watch my other videos. assets equals liabilities plus owner's equity. DC, right? Inventory is an asset. It's going to typically have a debit balance. Okay. So right over here, job 49 had been completed at a cost of 90,000, was part of finished goods. There was a $15,000 balance in raw materials account on January 1st. Okay. Now this kind of makes sense. And why does this make sense? Because factory payroll and factory overhead have to be closed out to zero. So these are kind of the only things that actually have beginning balances. So let's go ahead and take a look at during the month. During the month, Lock Company began production on jobs 51 and 52. So the beginning for both of these is going to be 0. Okay, began production, completed jobs 50 and 51. So both of these are going to end up in finished goods. We'll deal with that later. And then they were sold on account, and the following additional events occurred during the month. I purchased $90,000 of raw materials on account. So my raw material purchases are going to come over here under raw materials inventory as a debit. I incurred factory labor costs of $70,000. Now, this is really meaning that what was the total amount of the factory payroll? So my total factory payroll was $70,000. Okay. I incurred manufacturing overhead costs as follows: depreciation on equipment was $12,000. Other various manufacturing overhead costs and this over here was at $16,000. Okay. Now, so I've just put those in here, right? My total factory payroll, my factory overhead. And what you'll notice here is when I'm dealing with factory overhead is before we would just list out all of these costs over here on the left. Once basically by the end of the month, we would just ship it off over here to one work in process account. But because we're now dealing with multiple jobs, we're going to actually have two parts of our factory overhead T account. We're going to have actual, which is what we actually spent, and then we're going to have applied, which is how the overhead is being applied to jobs. So let's now go ahead over here and take a look at this one. Assigned direct materials and direct labor to jobs was as follows. So from this over here, when we see direct materials, so it was assigned to job 50 was 10,000. We had 39,000. We call this direct materials to 51. And then we have 30,000 direct materials to 52. So over here, I'm going to have over here, so my direct materials. So DM is direct materials. So over here, I've got direct materials of 10. For job 51, I had direct materials of 39. And then over here for job 52, I have direct materials of 30,000. So if it helps us to kind of visualize this a little bit better, and we'll come down and make this a little bit more colorful, like an Islands coloring book. Okay. So we've got those. So once we say we're applying basically assigned direct materials and direct labor, they're going to be coming out of the raw materials and work in process accounts respectively. So over here for direct labor, it's 5,000, 25,000, and then 20,000. So this is direct labor for job 50, direct labor for job 51, and then direct labor for job 52. And we'll go ahead and use more coloring over here to make this nice and exciting, because accounting is always exciting. All right. And remember, our three different components when we're dealing in job order costing with what we're putting into production are going to be direct materials, direct labor, and then we're going to have applied overhead. We'll get to that in just a moment. Okay. So over here, going on with the color coordination. And then this last one here. Okay. So over here, it also says we assigned indirect materials and we assigned indirect labor of 20,000. What does that mean? Well, direct materials is basically what directly relates to production. So we have the 10, the 39, and the 30. For indirect materials, this is going to come out of raw materials, and this is going to go to factory overhead. So this is going to come right down over here to factory overhead. This is going to be our indirect materials of 17,000. And we can also go through over here and make a little nice little coloring book. Why not? It's always fun. Okay, so that's over here. That is our indirect materials. And we also have indirect labor. Remember, factory payroll is made up of two different components. It's going to be equal to direct labor plus indirect labor. Now, even without telling you what the indirect labor was, I could pretty much guess it. And it's not really necessarily a guess, but what does the indirect labor have to be? Well, one of the things we said is that factory payroll and factory overhead both have to go to 0. So right over here for this factory payroll, I know I'm going to need, well, to make this account go to 0, I'm going to need a credit of $20,000. And if I put in that 20, this equals 70. My ending balance is now gone down to 0, right? And that's what we're trying to get to. We want that balance to be at 0. So this over here, this is indirect labor. Where does that indirect labor go? This is also going to be going into factory overhead. So even though it gave us this $20,000 here, I'm not that nice on a test. I'm going to make you figure out what that is. So again, right over here, that's where that number is coming from. Okay, so, and then the first thing we're being asked to do is calculate the predetermined overhead rate for 2025, assuming lot company estimates total manufacturing overhead costs of 840, direct labor costs of 700, and direct labor hours of 20,000 for the year. Now, because we're kind of going through, interesting. Okay, it's not going to be the same, but obviously that was from a prior period. But let's go down over here and take a look at this. We're going to estimate total manufacturing overhead costs of 840,000. Okay, and over here, this is going to be for 700,000. And I want to make a note to myself right now. I'm going to pause because I'm going to go through and cut. Okay, so let's now figure out what the direct, how do we go through and figure out what our applied overhead rate is? And what does this actually mean? It basically means that we're going to need to go through and estimate our factory overhead based on values that were being given. And if our total estimated factory overhead costs were 840,000 and our estimated direct labor costs for 2025 were 700,000, that means my rate for every dollar of direct labor that I go through and spend, my rate is going to be $1.20 per every dollar of direct labor. So over here, when I'm applying factory overhead, I'm going to take 5,000. I'm going to multiply that by 1.2. That 1.2 again is my estimated factory overhead. These are both in dollars. I don't really care about the direct labor hours for this particular one. What I'm more interested in is looking at the total, basically the overhead costs and then the direct labor costs. So over here, I'm basically saying 5,000 times 1.2. This is going to be 25,000 times 1.2. And this is going to be 20,000 times 1.2. But do these numbers magically appear? No, where did they come from? They came from factory overhead. And so over here, we've got 6, 30, and 24. This is a very, very important step. right? Just because you've got the 1.2 multiplied by the 5, that's great. But this has to come from someplace. And it basically, because we're estimating our factory overhead, it's going to be what we call applied factory overhead. Okay. So here is our applied factory overhead for each one of these over here. And again, where did this number come from? It's 5,000 times 1.2, 20,000 times 1.2, and then 25,000 times 1.2. So this is going to be the job 50, job 51, job 52. Okay, so those are the only 3 active jobs we have right now. So let's go through and take a look at our next one. Okay. So we've kind of gone over here. So it says open job sheets for 50, 51, and 52. Yeah, we just did that. Prepare the journal entries. Don't really want to do that. Journal entries. Okay, so now let's kind of go through and take a look at the rest of these items. Okay, so let's first come over here to raw materials inventory. So over here for raw materials inventory, I have total debits of 105,000. I have total credits over here of 96,000. So you've got an ending raw material inventory balance of 9,000. If I was giving this question on an exam, what I would typically do is I would either remove indirect materials and give you this ending balance, or I could give you the indirect materials and have you compute this. Factory payroll has to be at 0. When we're looking at factory overhead, right, what happens with this balance? And let's go through over here and take a look. So over here, we've got actual, and then we have applied of, we've got 65, and then over here, we've got 60. Now, the one thing that we have to remind ourselves as we're going through and using factory overhead is that with factory overhead, this balance over here, we've got a debit balance of 5,000, okay? And in this case over here, we're going to say that, well, was factory overhead over or under applied? Well, this is going to be under applied. Why is it under applied? Because my applied of 60 is less than my actual of 65. For this particular account, as we mentioned, what does this balance have to be? This balance with factory payroll, it has to go down to 0. So what we're going to do over here is we're going to credit factory overhead for 5,000. Now, where does this go? If the amount is not materially significant, we're going to basically put it over here. We're going to do the opposite over here because for every credit, I need a debit. I'm just going to go ahead and put it over here to my cost of goods sold. If it was materially significant and it's not being asked for us to do that in this particular question, you'd have to allocate it amongst the different parts. But generally, it's going to go to cost of goods sold, and this is going to go down to 0. Okay, how do I do the journal entry for this? And this is typically a journal entry I would have you do. I would debit cost of goods sold. I'm crediting factory overhead. And this is basically to adjust for under applied factory overhead. Okay. So I would typically do this as a very last step, but the way that this question is kind of worded, it's just a little bit funky. So we're just going to go ahead and do it like this. Okay. So account date, account, debit, credit. All right. Let's now go ahead and take a look at our next one right over here. Now, one of the things I just edited out of this video is that I was trying to basically make a correlation with the factory overhead from the prior period, but they came up with new rates, and that's why that doesn't work. Now, let's go through and take a look at each one of these. Okay, so what do we do with each one of these parts? And this is where the language from earlier is going to be coming into play. So they began production on jobs 51 and 52 and completed job 50 and 51. Okay, so they completed job 50 and 51. What does that mean? That basically means that these jobs can no longer stay in work in process. So what I'm going to have to go through and do is to essentially remove these jobs and put them into finished goods inventory. So this beginning was job 49, job 50 right over here is going to be at 69,000. This is now going to go to 0. Job 51 was also finished. So over here, this is at 94,000. This is also now going to 0. We're going to put job 51 right over here of 94,000. This is at 0. Our job 52, this is still in process. So right now, the ending balance, and we can leave this in work in process, is at 74,000. So we can leave that one alone. That one's fine. However, because job 50 and 51 were completed, I have to move them out of work in process and into finished goods inventory. Okay, now, if I was asked, what is the cost of goods manufactured? Right, what is that cost of goods manufactured? As well, it's what we finished basically putting to finished goods inventory during the month. So we're going to have job 50 of 69,000 plus job 51 of 94,000. And over here, this would be a total of 153,000. Okay, that would be our cost of goods manufactured. Now, over here, it tells us that we sold 2 of the different jobs, right? So over here, jobs 49 and 50 were sold on account. So over here, what we're going to now need to do is we're going to need to transfer these 2 out of finished goods inventory and over here to cost of goods sold. Okay, so at the end of the day, our ending balance over here in finished goods inventory should just be 94,000 or job 51. When we look at what cost of goods sold should be, the cost of goods sold should be right over here. It is going to be 90,000 plus 69,000 plus 5,000. Now, on your solution manual, they don't include the under or over applied overhead, which I think is incorrect. I would be going through and I'd be going through and applying that to cost of goods sold. At least that's how I go through and teach it. Okay, so if we go through over here and let's go ahead and take a look at the rest of our questions. So over here, so calculate the predetermined overhead rate. That was 1.2. Open, we just did that. Job cost sheets. I prepare the journal entries to record the sale of any jobs during the month. So if we were to go through and prepare the journal entries, basically for any sold jobs, how would we go through and do it? Well, if you remember when we were back in financial accounting and we're going through and we have a sale of inventory, right? What would we do? We would debit accounts receivable and credit sales. And then we would debit cost of goods sold and we would credit basically over here, credit inventory. Okay, so in this case over here, what I'm going to go ahead and do is that because these sales were made on account, meaning that they were basically, it's going to be accounts receivable right over here, sold during the month for 122 and 158 respectively. So right over here, our total sales. So our total sales were 280. Our cost of goods sold right over here is going to be at 159. And over here, you've got your inventory for 159. So this is just how we would go through and record the journal entries for this particular item. I would need a description, but at the same time though, too, this is basically being closed out on a separate entry. So that cost of goods sold entry is going to show over here. If you're in my class, I would never have you do it this way. I would ask you to prepare the income statement. And what that would be is you'd have sales less cost of goods sold equals your gross profit. So if you're going to do it the Tchaikovsky way, it would be 280 minus 164 is going to give you a gross profit of 116. Okay, so over here, total the job cost sheets. This is essentially what we're doing right over here. Job 52, job 50, which is basically sitting in finished goods inventory. Prepare the journal entry. What is the balance in the finished goods inventory account at the end of the month? Well, it's $94,000. Why they're not telling you to use T accounts the entire time. And what is the amount of the under applied overhead? Well, overhead was under applied because the applied is less than the actual by 5,000. So, again, if you're looking at the solutions for this, and we all do our solutions differently. But one of the things, at least for myself, as I'm going through and preparing these for job order costing, I am a huge believer in T accounts, because when you kind of look at some of these solutions, and just give me a second. So this is the solution manual that's being used for problem 15.1. And when you kind of look at this as how this is being set up, and by the way, I'm not bashing on Wiley, because McGraw-Hill again, I'm just such a huge believer in T accounts, that this is like doing it like this, of like all these different sheets. In my opinion, it's significantly easier to go through and to just kind of go through and kind of figure out like, okay, how do we go through and do this? In my opinion, it's just easier to use T accounts, right? Because if you're using T accounts, you're going to actually see the flow through and how everything goes. So again, I hope you found this video to be helpful. I appreciate you liking and subscribing to the content. I want to give a huge shout out to Wiley for allowing me to use their material to make this video. And I look forward to seeing you on the next video. Have a great day.